What happens to fraud in the Medicare appeals process? Imagine you're trying to get a claim approved or denied, and suddenly you suspect something isn't right. You might wonder, does the appeals process catch fraud? Well, let's find out. The Medicare appeals process is mainly about resolving disputes over coverage and payments. It has 5 levels, starting with redetermination by a Medicare contractor and ending with a court review. It's designed to make sure you get the right decision on your claim. Now, Medicare fraud involves intentionally tricking the system. This could mean billing for services not provided or misrepresenting treatments to get more money. Fraud is a serious crime, but it's handled separately from the appeals process. Even though the appeals process doesn't directly investigate fraud, it can sometimes reveal signs of it. For example, if a provider submits suspicious claims during an appeal, that might catch the attention of authorities. But the actual investigation is done by agencies like the Office of Inspector General or the Federal Bureau of Investigation. If fraud is suspected during an appeal, the process may pause. The case might be handed over to law enforcement for investigation. The appeals process itself doesn't decide if fraud happened. Instead, it focuses on whether your coverage or payment decision was correct. Providers and beneficiaries should be aware that irregularities or unusual patterns found during an appeal could lead to further scrutiny. It's important to keep accurate records and follow Medicare rules to avoid issues. If you see something suspicious, report it to Medicare or law enforcement. In summary, the Medicare appeals process isn't meant to catch fraud directly, but it can sometimes uncover irregularities that lead to investigations. The main goal remains resolving disputes about coverage and payments, while fraud investigations are handled separately by law enforcement agencies.